weaponry.
While you can hear the tear gas canisters being lobbed at the protesters.
There when the story breaks. BBC News. Follow on the app.
FedWatch, America's central bank, is expected to keep interest rates at a 2-decade high, but it may signal that cheaper borrowing costs are ahead. And Boeing reports an even larger loss for its second quarter. So can the plane maker chart a new course? Hello, welcome. This is Business Today. Now, the Fed Chair, Jerome Powell, and his team are not expected to cut interest rates from their 2-decade high today, but they are expected to give very strong guidance that a cut will come at next month's meeting instead. Now, cutting the cost of borrowing just before November's election, though, would be highly controversial. Donald Trump, of course, has already warned the Fed that they must not do that. Here's the view of one market watcher who says that despite inflation being lower, consumers are still feeling the pressure of higher prices.
Sentiment really is driven largely by inflation and the level of prices, not necessarily the rate of change that we tend to focus on. So to the average US consumer, inflation is at 20+% because they're looking at that cumulative inflation rate over the last 3 years. So I don't think the Federal Reserve starting to cut rates in September changes the sentiment that we already have in place.
Let's talk to Erin Delmore, who's our North America business correspondent. She's in New York for us. And Erin, it certainly seems right now that a lot of investors are pricing in that cut, and it could come sooner than they may have thought.
Yeah, investors are banking on mid-September, and that's the next meeting of the Federal Reserve after the one that concludes today. So what does that mean for us? Well, it means that we widely don't expect to see any announcements, any interest rate cut decisions at the end of today's meeting, but it means that we're going to be listening keenly for any clues in the Fed speak, especially when we see Fed Chair Jerome Powell talk today and take questions. We'll be looking for any hints he might give about the state of the economy and about what could be ahead, particularly for mid-September. You know, this is a bit of a balancing act for the Fed. They've been looking at the path of inflation. They've also been looking at the strength of the job market. And at a moment like the one we find ourselves in, yes, we see inflation cooling a bit. We see a slowing job market, although still strong. And that's the kind of environment where we could expect a cut coming down the pike.
And the other thing you're keeping an eye on for us are those Boeing figures. And we know well-documented problems for Boeing, and the numbers tell that tale, don't they? Heavy loss of $1.4 billion just in the second quarter.
A heavy loss, not wildly surprising given what we've seen from Boeing over the last quarter and over the last year as a whole. Of course, it's been a tumultuous time. Now, that announcement of that loss was paired with a new announcement of the incoming CEO who'll be taking over for outgoing CEO Dave Calhoun. And we're seeing a lot of the questions and concerns of Boeing being attempted to be answered with this new appointment, somebody who is an engineer by training. And that helps to make a bit of an adjustment for Boeing with the criticism that the company had been more focused on financials than on quality control and safety issues. An engineer was thought to be at the forefront of this conversation about who could lead the company. It's somebody with decades of experience in the field, the former head of one of Boeing's suppliers, and they're really hoping that this can do some work to not only restore investor confidence, but to also help shore up Boeing's reputation with regulators and reinforce that commitment to quality control and safety.
OK, Erin, for now, thanks so much. I know you'll keep an eye on both of those stories for us, but for now, thank you, Erin Delmore in New York. Elsewhere, the tech giant Microsoft has been giving markets a renewed case of AI anxiety. Investors, of course, have bet trillions of dollars that advances in artificial intelligence will help boost company profits. So any update from big tech firms is being scrutinised line by line. Microsoft reported better than expected results overall, but shares fell sharply on news about Azure. That's its vast cloud computing operation that is used by many firms for their AI systems. Well, Microsoft says revenues at Azure grew by 29%. That's in the 3 months to June. But it was less than expected and a slowdown on the 31% growth that was seen before that in the previous quarter. Well, Microsoft is spending a fortune on building AI. Its capital spending bill for the 3 months hit $19 billion. That's a jump of more than 77% on the same time last year. So will it pay off? Here's a view of one tech watcher.
But what I think investors are looking at right now is exactly what kind of return is a company like Microsoft, which is one of the biggest in the world, getting from all of this AI investment. They've spent about $45 to $50 billion in their financial year on rolling out these big, ambitious AI-related projects. They're not getting the kind of return in terms of revenue and ultimate profit that they had first anticipated. Now, Microsoft says that's going to accelerate into the second half of this year and then beyond, but so is the spending. So right now, investors are left asking questions. To what degree are we going to see profit materialize as a result of this spending? And is this spending going to carry on forward into next year and beyond without the kind of return that people are hoping for? So that's a big part of the reason that the stock was trading so weakly after the numbers. But my suspicion is when people look more directly into the details and see the potential of this investment, the stock is going to recover. Well, Microsoft earnings are very important for the tech sector, particularly this month, because what we have seen is an enormous decline in the value of some of the biggest stocks in the world. And that's ultimately because investors are starting to wonder whether all of this money that companies are spending on AI investment is generating a return. In other words, are they monetizing it? There's really no application at the consumer end to define that. In other words, Apple is talking about having some AI technologies embedded in the iPhone, and other companies are putting it in front-facing things such as web browsers and other portions of the computer. But that's not really the killer app that we're looking for in terms of monetizing AI spend. And people were looking at it from Microsoft in order to justify. They haven't quite seen it just yet. So I do think that's going to be a drag on some of these other companies. And other companies that are reporting quarterly earnings this week. And that includes Apple, but it also includes Meta Platforms, which is the owner of Facebook, WhatsApp, and Instagram, and Amazon as well, which is not only an online retailer, but the biggest cloud computing company in the world. And not many people actually know that that's such an important portion of their business model. So we'll get more indication as to how that AI spending is going to play out over the coming months and to what degree it's being monetized over the coming days. But of course, investors have to navigate that alongside all these geopolitical tensions that are now bubbling up in portions around the Gulf region. And of course, two very important interest rate decisions from the Bank of England and the Federal Reserve. So it's going to be a very hectic day on Wall Street today.
Yeah, the question of those big bets on AI and whether they will pay off. Let's head to Australia now, which is in the grip of a housing crisis. Rents there have soared, and with that, demand for homelessness services are rising too. As many as 122,000 people in the country are now homeless. Rents have been rising the fastest in Western Australia, 20% in the past year alone, which also happens to be the wealthiest part of the country. Our Australia correspondent Katie Watson reports now from Perth.
I don't want to face the humiliation of being termed homeless.
It's not exactly home sweet home, but it's all 71-year-old Mary's got. Mary's not her real name. She's too ashamed about her situation. 9 months living in this battered car.
The moment people know that you've become homeless, you become what I call a non-person. You no longer have any value in people's lives.
When Mary's landlord evicted her, she couldn't find anywhere else to live that she could afford on her pension. Every day now is the same. Her love of books offers an escape from her reality. If she's lucky, Mary gets a few days of respite care, but there's no guarantee. Mary's husband is in a care home with Alzheimer's. He doesn't know she's living like this.
He'd be horrified, absolutely mortified.
What's the hardest thing about sleeping and living in your car?
The loneliness, I think. You know, you've got no TV, you've got no neighbours to say hi to. People often just give you the side eye and think, oh God, not another one, and just walk away.
Older women are the fastest growing group of homeless people in Australia. Domestic violence also drives numbers up. But there's something else happening. In recent years, soaring house prices have killed many people's dream of getting on the property ladder. Underinvestment in social housing and a growing population mean finding somewhere affordable to rent can be a challenge. It's created a new face of homelessness.
We're seeing older people, working families, individuals who are working that simply can't afford to keep a roof over their head. A single trigger can push people into homelessness, and there really is very few options for them, and they don't know where to start.
We've come to Perth because this is where the rents have been rising the fastest, but unaffordable housing, struggling just to find a place to live, these are issues that Australians are facing across the country. It's a crisis that everyone is talking about. As evening falls in the richest part of Australia, these queues for free food are getting longer. Every night, different charities come down here to help. As winter sets in, clothes donations are in high demand. There's also a laundry service, a mobile doctor surgery and a hairdresser.
Water and a nice meal for you.
The street chaplains are working tonight too, giving out food to those sleeping rough.
Have a meal?
Just a few months ago, Michelle was the one receiving the handouts. A registered nurse left with nothing after she got evicted, crashed her car, and her mother started struggling with mental health.
I ended up losing my job. I think it took a while for people to actually realise I was homeless because I didn't look homeless. Gradually over time you become so used to the street that you lose yourself a bit.
Michelle admits she got lucky, but with no quick solutions to Australia's housing crisis, plenty more will be finding themselves in a desperate situation they never expected. Katie Watson, BBC News in Western Australia.
Let's take a look now at some of the other main business stories that we're following for you. And the UK's Finance Minister, the Chancellor, Rachel Reeves, has admitted that the party may have to raise taxes in October's budget. She was speaking to the BBC's Newsagent podcast about her claim on Monday that the previous government left a £22 billion hole in the public finances. The Labour Party has pledged not to raise income tax, VAT or national insurance, but has not ruled out higher taxes on inheritance, capital gains or pensions. Samsung has seen profits rise 15-fold in the 3 months to June to $7.5 billion. The South Korean tech giant is forecasting strong demand for its chips in the second half of the year as firms invest heavily in AI. Starbucks has seen global sales decline as people struggle with the cost of living. The coffee giant's been announcing deals and offers to try and tempt customers back to its stores. Its latest results echo those of McDonald's and Domino's, which have also seen consumers cut back on spending. Quick look at the numbers for you, and as we said, wait and see as far as the Fed is concerned. What will it do as far as the cost of borrowing is concerned in the world's largest economy? There is a little bit, though, of optimism in some of the corporate results that are coming out right now, and the exchange rate boosting profits for the FTSE 100 companies. Brent at $80. I'll just show you what's happening in the US if I have those numbers for you. Those are the ones that we'll be waiting to see what happens, certainly as far as the Fed is concerned. The Dow there up just shy of 0.5%, but the tech-heavy NASDAQ, remember, it's reporting season for tech, 2.5% higher. You're up to date. We'll see you very soon. Bye-bye.